Right, so let's go ahead and continue on with Coffee Cafe week 3 here. So, yes, last week we started setting up the coffee cafe, right? We ordered some more coffee. We bought some more, some sugar and some creamer. We set up our petty cash fund as well as our cash register. Excuse me. And we set some prices for the items that we sell in our store. So we're going to act as an in-store seller where we sell the coffee by the cup, and then we also are a wholesaler that sells coffee by the pound. Okay? So this is where we last left off. Now here it says that we have to go ahead and, okay, so Bob filled up the truck with some gas and again, used the business credit card to pay for it. So again, he went to General Gas and Motors. Here's the date, the 16th. And again, it was 5:15 p.m. and he decided to go ahead and pay for gas. So, how do I record this transaction? What did we buy?
We bought gas.
Okay, so let's take a look at my chart of accounts. Now, gas. Is this something that we own or is this something that we're going to use?
I mean, it's something that we're going to use.
Correct. So what do we call those things that we use?
I'm not entirely sure. Assets?
That's something you own. Okay, what do we represent that something that we use or get rid of or spend for?
Inventory?
Inventory is an asset. Are we buying gas for inventory? Are we going to sell our gas?
No. I'm sorry, but I can't remember.
It's okay, go through. So out of the 5 types of accounts, we already eliminated assets, right? What else is another type of account? In this case, yes, expenses is something that we consider something that we're going to use right away, we're going to try to get rid of, or we spend the money for the business, right? So in this case, we are spending money to buy gas so we can use it, right? So in this case, it will be an expense. So let's take a look at my list of expenses here. Okay? Which kind of expense would this be? Is it an advertising expense? Is it a bank fee? Is it a business expense? Is it a freight expense? Is it insurance expense?
Wouldn't it be a business expense?
It can be, but let's keep reading down the list to see if there's anything that's more appropriate. Is it labor? Is it a license and permit? Is it office supplies? Is it a payroll expense? Is it a purchase expense? Is it a utilities expense? Or is it a travel expense?
Travel.
It'd be a travel expense, right? Because what is gas used for? He's putting gas in the truck. What is the truck used for? Traveling around for the business, delivering the coffee to the respectful customers, right? So in this case, this is a travel expense. So again, this is $63,000. Now, how did I pay for it?
A business credit card?
Yes. So what is that? What kind of account is a business credit card?
Visa payable liabilities.
It's a liability. Because when we charge money on a credit card, is that money that we own?
No.
No, it's money that we borrowed from a financial institute that allows us to pay for stuff ahead of time, and we have to owe that money to that credit card lender. So in this case, we have a Visa payable $22,000. So we got travel expenses. And we have okay. How much did I spend on gas?
91.54.
Yep. Right? 91.54. It's a truck. It probably uses diesel or the highest premium 91 octane. So in this case, it's going to be the most expensive gas. Okay? So, what should my description say?
I put where we went, general gas and motor, 23 gallons, premium 91. And you don't have to put Visa on there, but oh, it's got a receipt number. Be sure and add that in. Sales receipt.
Sales receipt number 3849876. Okay. We bought 23 gallons of gas. Okay. And that's good enough. Okay. Good. So now that we finished our journal, what's next?
Your ledgers.
Mm-hmm.
So we would go to travel expense in the expense ledger.
Here you go, travel expenses.
Yeah, and my screen is lagging for some reason today, so I can't see where you're at quite yet. So go ahead and do your thing. Whoever else is there to tell you until my screen catches up.
Okay. So we got some 23 gallons of 91 octane, whatever you want to pay, whatever you want to say. Okay.
That's $3.98 a gallon.
It's up to you. It's subjective if you really want to put that information in there.
Yeah.
What page are we on the journal?
6.
We are on page 6. For $91.54. Again, whatever you put in your journal is what you're going to post into your ledger exactly. So if I debited my travel expenses for $91.54, that's exactly what you're going to put in your ledger.
And then you would go to liabilities and Visa payable, which is just down a little ways. and you put essentially the same thing except that it's a credit instead of a debit.
Oh, yes. So in this case, because we charged more money on our credit card, so we owe more money, so $91.54 on the credit side, right? Which will increase your credit card balance from $540.90 to $632.44. Okay?
Now, is this in our subsidiary ledger because it's kind of an odd expense? It wouldn't be in the vendors or anything.
Yes, it
Yeah, I didn't know if you put it in there or not.
in this case, like, what if I go and complain to the gas that, or what if I paid for it and then they didn't give me the gas, or, for example, right, you give them cash and then they pump up something, but then let's say the gas tank was empty. I don't know. For any reason there comes to a conclusion where you have a problem that comes with the vendor, then yes, you should definitely for surely record it. Now, in this case, this is just because I want to keep it so that we can keep track of it. Even though you're right, there's no way we can go and return gas, right? There's no way that you can uh, get a discount on gas, or you can, but it's probably through some kind of program. There's a lot of things that you can't really do when it comes to buying things like gasoline, right? It's a one-time charge. There's no refunds for it. But for any reason, this is also going to just tell you that this is a proof that a transaction did occur and that you spent money from this vendor. That's all that this is really recording here if you are using your ledger for this. So that's what I'm going to do, is so then, when I backtrack my receipts, I could say, well, I did buy gas on Sunday, right? It should be, Albert should be driving just to and here. He shouldn't be driving anywhere else. That could be also something that you could also verify as well. Okay. All right. So today's the 16th. We purchased gas, right? 23 gallons of 91 octane 91 gas.
Insert invoice, you have your sales receipt number.
Mm-hmm. So it was receipt number 3849876. Okay, so 384.
$3849876.
Okay. Post reference.
Page 6. There are no terms. The invoice amount was $91.54, and that's what we paid. I put Visa in the notes just so we know it wasn't a cash payment.
Right. Okay, so we owe $0 here. And yes.
Because that way, if we're doing the bank reconciliation at the end, we know that it should be on the Visa.
Mm-hmm. Good. So again, there's another reason why we have to keep track of these records, is because, again, it's for reconciliation purposes. Okay. And that's it, because this had nothing to do with inventory, had nothing to do with your employees. So we can go ahead and move on. Okay, so now it's officially the 17th of June, and the first thing we have to do is we gotta pay LV Remodeling Company for the foundation reinforcement, which is the invoice number 1760. Use a check.
Okay, so we need to go, we've got to know how much it was for.
Mm-hmm.
So I would go into the subsidiary and look at LV Remodeling Company to see what the total amount was on that.
Okay, here we go. LV Remodeling for the 1760 invoice due on the 17th of June. Let's see. The grand total amount is 1560.
Right. Then you would go back to your general ledger sheet.
Journal.
Yeah.
Okay.
And you've got, okay, we're going to be debiting accounts payable.
Good, because in this case, we've recorded the bill since the 13th, and we said that we owed the money. Now that I'm going to make a payment today, I need to decrease my what I owe. So in this case,
And we're credit checking because we're writing a check. And then go to your check register. And we're writing the check to LP Remodeling Company. For $15.60.
excuse me.
Yep, and payment at $17.60.
Okay.
And that's check what? $15.18.
Mm-hmm.
Okay, so back in the general journal, um, in the notes, did we put in the $15.60?
For what?
I'm not. There we go. I'm caught up with you. Okay.
Okay.
So in the notes, we would have payment to LB Remodeling Company. Payment of invoice 1760. And check number 1580.
Good. That's good enough information.
And then you go to the general ledgers.
Okay, so we're going to go to the ledger now.
And you would go to accounts payable in liabilities. Put in today's date. Invoice 1760. And check 1518. On page 6. And it would be a debit for 1560.
Okay. So a debit to 1560 will cause us to reduce our liabilities here. Okay, so that will leave us with how much in our liabilities account?
16,000 something.
$16,791.74.
And then in your assets, you would go checking. put in check 15 with today's date, 15/18, page 6, credit 15/60.
Okay. So then what would happen to our checking account?
It'll increase.
It will what?
It goes down because we're taking money out of it.
Yes.
Oh, wow, we're in the negative.
Okay. So now we have negative $270. Now, how do I want you to view this? Now, this is just a rule. This is just how I do this, okay? You could choose however you'd like to do this. Now, I want to keep my formula intact, as in I don't want to make any changes to the formula because right now it's in the trend where every debit's going to increase, every credit's going to decrease. However, in this case, when you have a negative number on a debit side, that just means the same thing as if it were on the credit side. So you would have 270.08 on the credit side, right? So then what do I do if I have a double entry in one of the more two things here? Because I have one that's negative and one that's not negative. It's positive on the credit side. So because you are having a negative debit balance, that means you have a positive credit balance. So what I want you to do here, so to avoid deleting or getting rid of that formula that you have intact, I just want you to go ahead and type in the credit number that you have. And what I'm going to do here is I'm just going to white it out by changing the font color so it becomes invisible, right? The formula is still inside, but I changed the font color so I don't see it anymore. Okay? Now, of course, anything that's on the credit column, right? There's no formula there because I don't need a formula there because normally assets have a debit balance. So in this case, I'm keeping the formula in the debit side, but I'm making it invisible so then I can go ahead and make it look correct by putting the credit side, right? And this is going to tell me that I have negative $270 in my bank account, right? But I still have the formula running here. So that means every time if I enter, let's say I enter $500 into the positive, into the debit, right? My formula will still be intact. Okay? So in this case, right? Well, now let's talk about this. I just wrote a check out and it, in my books, caused me to go over. So in this case, right, would this be considered an NSF check?
If it hits the bank before you get money in there, it is.
Correct, right? In this case, this is our books, right? We just cut the check. Remember what a check holds, right? You may have cut the check, but it doesn't magically appear in the other person's bank account, right? Because if we're doing the process of mailing out our checks, which that's what businesses do. So if I cut the check today and I mail it out, today's Monday, right? Maybe I'll wait till the end of the day. So that means the mail won't be picked up until Tuesday, and maybe it might take 2 to 3 days to get to the other person. So it's Thursday. Thursday the person receives it, then they don't submit it till the end of the day. So that means they're not submitting it until Friday, and if Friday it processes the check, then it won't cash out until Saturday. So that is how many days that you are looking into processing that check. That was a total of 5 days, because that's true. You have to take into consideration of the post office as well. How many days does it take to travel? How many days does it take for the individual to receive it? And how long does it take for them to cash it out? So in this case, the money won't even come out until possibly maybe earliest Wednesday, latest Friday. Okay, that's if that company deposits their money as soon as they get it. So what happens here is that, is it possible that this is a NSF check? In this case, no, because right now you technically still have $1,289, right? Because the 1560 check did not clear yet. And it will not clear until most likely either the following day or Wednesday at most. So in this case, you still have money in the bank, right? So this wouldn't be technically an NSF check, not necessarily, right? All right. But even if we did write an NSF check, will that check go through?
Not immediately. Well, they would most likely send it through for you, but not necessarily.
Well, what was that one thing that we signed up for with the bank?
Oh yeah, that the overdraft protection on
We
the
have
credit
the overdraft protection up to $10,000. So if we cut a $6,000 check, we are in the safe. Even though they are going to charge us money, of course, because that's what all bank institutes do. Once you overdraft, you're going to get a bunch of fees and a bunch of interest fees on top of that, because that was the agreement terms that you agreed to, is that they will process a check and push forward to you up to $10,000 for you, but you better pay them back. Okay, so this line of credit, and it's also including in case you want to take personal loans as well, right? Increments of $1,000. So in this case, if Bob wants to take another $1,000 for himself, he can. It will just charge him for that. All right. So again, in this case, we haven't overdrafted yet, so no charges yet because we still technically have money in the bank. And the day that you cut the check doesn't mean that that's the day that they're going to cash it out. All right. So in this case, we are still in the good. All right, and we can continue doing our business transactions as usual. Right, but it's definitely something to keep an eye on. Right. So now that I have that there, okay,
Then
what?
you go to the subsidiary.
Then we're gonna go to the subsidiary. Okay.
And you put in the check that you paid, 1518, your invoice 1760. And you put that you paid it. And that should give us a negative or a zero balance now.
Mm-hmm. It'll give us a negative 1560, right? But when we calculate all of our account balances, we get to the grand total amount of zero. That means I don't owe LV Remodeling a penny. I paid off everything that I owed. So in this case, we're good to go and good in relations with LV Remodeling. Okay. So let's see what else has happened. Okay. So Albert submits an order number 101 for Katie's Coffee Corner. And this is what Katie has requested to purchase from us. Okay.
We'd have to do a sales order.
Okay, so in this case, we had to do a sales order to Katie's Coffee Corner, right? She wants to buy 15 pounds of regular coffee and 10 pounds of Supreme coffee with 20 coffee mugs. Grand total is going to be $189, plus we're going to charge them a $30 delivery fee. So therefore, they owe me, or Katie owes me $219.05. Now, let's take a look at the sales order. Do we need to record this in our journal?
Not yet, because we haven't ordered it and paid it out or anything. Well, it says terms is 50% COD.
Okay.
So that when we deliver it, then she has 5 days for the next 50%, right?
Correct. So that means she has to pay 50% upfront.
All right.
What else does it say?
It's to be delivered on the 19th.
What's today? Today's the 17th. Today's our grand opening day, Monday, June 17th. So in this case, this is an order. We haven't delivered it. They haven't paid us yet. So in this case, right, that means, is this a transaction that occurred?
Not yet.
Not yet. So in this case,
Put it in a subsidiary, right?
we will put it in subsidiary. Yes, correct. Now in this case, all this person did was order from us. Same thing like as if we did a purchase order, right? It's just an order. It's just a request form. Have we completed our services? No. Have we been paid? No. So in this case, nothing has been transferred from one another. Okay? And because of that, that means, right, it's just an order. That means Katie can call in and cancel at any given time, and we wouldn't have this order at all. So therefore, there's no reason for us to need to journalize it because it's the same thing as if we were doing a purchase order, right? It's just an order. They're just requesting items from us, but we haven't completed the job yet. So in this case, no, but there is a form that we can fill out, and that's going to be in the subsidiary ledger for the sales order forms, okay? So again, you have commissions, right? That's if, right, Albert has completed the task. In this case, he hasn't yet. And then we have some sales order forms. So let's go ahead and fill it out. Today is the 17th, okay? Sales order number 101, okay? And then customer's name, right? We have Miss Katie's Coffee Corner, okay? And what items did she purchase from us? Well, let's take a look. She purchased 15 pounds of regular coffee and 10 pounds of Supreme coffee with 20 coffee mugs. Okay, so again, I'm going to go ahead and put that in there. She bought some regular coffee by the pound. She bought some Supreme coffee by the pound, and she bought some mugs. Okay, so we said 15 pounds, 10 pounds, and 20 cups. Okay, now what's my unit price? Well, let's take a look at our chart that we had earlier, right? How much did we charge for each item for wholesale since they're buying us from the pound, right? So in this case, we charge for regular coffee $3.29 per pound. For the Supreme coffee, $3.99. And then for the coffee mugs, it's $4.99. So in this case, that's exactly what we need to know. Regular coffee is $3.29. Supreme coffee is $3.99. Coffee mugs are $4.99. And if I go ahead and multiply these across, these numbers should match your sales order form. Okay, do I have $4.99? Okay, do I have $4.90, 35 for the regular coffee, $39.90 for my Supreme coffee, $99.80 for the coffee mugs? Yes, and this is where we have also the capabilities to also put a delivery fee, right? One of them, which we charge. How much is it for one delivery charge?
$30.
It's $30 for the delivery charge. So in this case, right, we need to tack on a $30 charge. So equals sum. That means Katie owes me $219.05, which is true. Okay, so $219.05. And when are we expected to deliver it by? Okay, we need to remember to deliver it or have Albert deliver it by the 19th of June. Okay, So good. We are done with the sales order. Okay. So then here we are. Finally, we got some grand opening sales, right? Nothing much to do on the very first day except for wait for customers to arrive and take in some orders. So in this case, for the grand opening sales, there's a 20% discount for the grand opening. Okay. So here we sold a total of 79 medium regular coffees. We sold 70 large regular coffees, 81 medium supreme coffees, and we sold 84 large supreme coffees. Okay, and here's the amount of total plus the discount and the tax that was charged. So in this case, we got a grand total of $745.94. And guess what? Deposit all cash sales to the bank. So in this case, we're assuming we're running on a cash basis, so only cash only. In this case, we are only accepting cash, right? We haven't adopted a credit card system yet because you have to pay for it. So in this case, not cash basis, but you know what I mean, right? All my sales are in terms of cash. So what does that mean to me? Am I supposed to journalize the sales of all my coffees that I did today in store?
And you would debit, oh crap, we gotta do sales tax and stuff too. So we would debit checking.
You would be debit checking because you have this note right here at the bottom that says you're going to end up depositing all your cash sales to the bank. So again,
You debit checking for the $745.94. And then you will credit sales. Now, are we breaking down each of the kinds?
what
in
it
our
let's
sales?
let's
Or
see
would
what my
we
chart
have
account
a
says.
general ledger? Bleh.
Let's go see. Let's check out my chart of accounts.
Revenue. Sales regular, sales premium. Okay. So they're only doing it, oh no, they got regular, medium, and large. Okay. So we get to put in all of those.
We gotta put in every single one of them because in this case, I want to keep track of my sales in point where I'm keeping track of every sales per cup because I want to know from this information, right? I want to know what's my popular coffee that's being sold the most, right? What do my customers like more? Are they buying the supreme coffee more or are they buying the regular coffee more? Right? So in this case, yes, you're going to identify every single sales. Now let me take a look at all those sales numbers. So medium coffee is 4,300, medium regular is 4,350, then you got 4,450 and then 4,500. Okay? So sales, regular. Now in this case, you're gonna have to type out everything. This is your journal, not your trial balance or anything like that. So regular. Oh no, it goes medium, regular coffee. Okay, which was 43.50. Okay, we got sales.
I thought the medium regular was 300 and the large was the 350.
I believe so. Okay.
And then you got medium supreme. And large supreme. And then you'll also have a sales discount.
Now, where do you put the sales discount? Does it increase your sales or does it decrease your sales?
It decreases it.
It what?
It decreases it, so it would go under the checking.
It would go under the checking. Good. Right? Because a sales discount is what reduces the sales amount, right? You're not going to get the full money because you decided to discount 20%. So that means 20% of those sales are not going to be collected. Okay? Okay? So let's check out what that account number is for that sales discount. Sales discount is going to be 46,000.
And then you get sales tax payable.
Sales tax payable. Okay, so let's take a look at my chart of accounts.
There it is, 27,000.
27,000. Okay.
Then we just plug all the numbers in.
Okay, so how much was my discount?
172.27.
What was my sales for the medium regular coffee?
157.21.
Large regular coffee?
It's 209.30.
Okay, medium.
Green medium 201.69. Large is 293.16. Sales tax is 56.85.
Okay, so let's do my rule of thumb here because I'm dealing with so many different accounts. So I'm going to test to make sure, does my debits equal my total credits at the end of the day? So I have $918.21 on the left, $918.21 on the right. So in this case, awesome. Okay.
And in your notes, we don't have to put all of the separate things, do we? Because of the fact that it's all listed in the accounts. So how would you note this one?
In this case, right? Well, first off, recognize that what happened here.
It
Well,
was grand opening.
It was a grand opening sales. Okay, good. Right?
20% off.
And then I would say, what kind of sales is this? This one was in-store sales, right? You could also say this was in-store sales.
Yeah. I forgot we had the two separate kinds.
Yes. Right. So in this case, this is an in-store sales because we're selling our coffee by the cup in-store. Right? All right.
Then you get to do all the general ledger ones.
Yes, so this is what I'm talking about, doing the accounts one at a time. For instances, when you have a journal where you're using about almost, almost 6 or 7, 8 numbers, it's best to not jump ahead and do everything and put everything in order. Do it exactly how you see it. Do your checking first, then your sales discount, then go down the line and go through all your sales here, and then last but not least, do your sales tax payable, okay? Because if you're not very focused on this is where you would cause discrepancies. You might forget a number, you might do an accident typo, etc., etc. Okay? So here we are in the ledger. First thing that I'm going to do is we are in our checking account.
Date, deposit.
You could do deposit or in-store sales.
Yeah.
Today is
6.
Excuse me.
and the total is it's a credit or a debit of 918, whatever the
Is
change
that
is.
how much cash I really took home?
No, you took home the 745.94.
Mm-hmm. Excuse
I'm
me.
glad, Dad. I'm tired.
It's okay. It's Monday, right? So 9:45. Oh, not, oh my gosh. Now you're confusing me. 7:45.94. 7:45.94. So that's going to increase your checking account, bump it back up to 475.86. Now again, if you had the cash already in your bank account, that means with deposits of cash, right? Usually you go to the ATM, right? Because it's probably after hours at this point. You're probably going to go around 10 o'clock because that's how coffee shops work. They don't close at 6 p.m., they close at 10 o'clock or 8 o'clock, whichever time frame that you have it as. And in this case, right? If you go to the ATM and deposit the money, it's going to show up tomorrow and the next day. Okay, so that's the benefit of having ATMs here is that it will take the money and have it into your checking account almost the next day. Okay, so that is good. That means we have enough money to cover that check we just wrote. Okay. Next is sales discount. So it's a revenue, right? Because sales discount is a sales, but it flows in the opposite direction because it's a contra account. So let's see.
There it is. Grand opening sale,
Mm-hmm.
20%.
Grand opening, 20% discount.
Page 6.
For how much?
Now, it's for, where'd it go? 172.27.
You had a comment?
No.
Okay.
Okay. So we got that. Then we go to sales, medium regular coffee.
There it is. Medium regular coffee. So in this case, right? This is where you can go ahead and write down how many cups of coffee you actually sold. So
Yeah,
in this case, how many cups of the regular medium coffee did I sell?
79.
79. You could just put 79. You could put cups in there if you want to, but the reason why I'm putting the numbers in there is because at the end of the month, when I calculate all my sales right here in the total gray right here, I can go ahead and equal sum that and it will give me the numbers that I need to know how many cups I sold, right? Right?
Okay, and the amount on that is 157.21.
Make sure it's on the credit side because we're on sales is increased by a credit.
Right.
Okay?
Okay, and large regular coffee.
Large yeah,
Yeah.
large regular coffee.
And I forgot to look and see how many they sold. 70. And the amount there is 209.30. And then go to medium supreme. So 80 cups. And that amount amount is 201.69. And large supreme we sold 81, and it was 293.16.
Okay, so 293.16. Okay.
And then sales tax payable that's in liabilities, isn't it?
Yes, because you don't own that money. It belongs to the government. So therefore, you owe the government money. You owe the state the sales tax money. So in this case, liabilities, I'm pulling through. Let's see, city payable. Here you go, sales tax payable.
Okay. And personally, on the note, I would put grand opening sale,
Okay.
and I would put the total amount times the tax. I would put the 20% with the total amount as listed in there so that you knew what the tax was paid on. Wasn't the tax paid on it before the discount or after?
It's always after the discount.
After. Okay, so you don't need to even know that.
No.
So, grand opening sales?
You could do grand opening sales. Now, what gives us the reason why we have to charge sales tax? Why do we have to charge sales tax?
Because it's our it's earned income. Yeah, we do retail.
Yes, we are officially in store. So if you're officially doing something that's in an official location, you have to charge sales tax. Okay.
So in-store sales.
Yeah, in-store sales.
No, that one is 56.85.
56.85. Okay. All right, question to you. Do we need to go to the subsidiary ledger?
No, because it's not a customer, a vendor, or it's in-store sales. It's an internal transaction.
Yes, but these are customers, aren't they?
But isn't your customers just your wholesale?
Okay, in this case, good. You identify that the people that that are my real customers are people that ordered from me, right? That gave me their phone number, address, and everything, right? So in this case, when we have in-store sales, yes, they are technically our customers, but however, what are the chances that you're going to have this exact same customer come back to your store? Okay? Especially, hopefully we do have returning customers because that's the whole point of our sales. But the whole point of our sales as well is to also bring in new customers, right? Bring in people that never heard of us to try our coffee. And if they like it, they come back. If they don't, well, then we don't really care to keep track of them, right? So that's the purpose of this and why I have to ask you this, because technically they are our customers, but we don't categorize them because they're not returning customers to the point where they want to be interested in opening an account with us. They're just there to buy your product and service, to try it and test it out. And if they like it, they come back. If they don't, forget about it. Then we don't need to keep track of them. And on top of that, the second thing too is we don't have an account with them, right? If I were to open every single account for every single customer that walks through the door, do you know how much time and how much effort that is wasted? Because again, if these customers decide to try your product and said this coffee sucks and doesn't want to come back to your store, then you have to inactivate their account for no reason. And on top of that, second thing too is they're all paying by cash anyways. So, again, if you want to keep track of your cash customers, that's fine. But the purpose of having accounts is to keep track of, again, you're keeping track of them in case they open an account with you and owe you money. That's the purpose of having a customer under your customers list, is for those transactions. Now, if you do have a returning customer that decides to do an online order and they want to order coffee from you by the cup, well then yeah, of course you can also do that, but we haven't set up an online website for that yet. We only set up one for the for Albert, right? Albert's the one that's in charge of that. So in this case, our customers are strictly just our in-store customers, and we don't care to keep track of every single one of them, because again, we have the possibilities of them either returning or not returning. So there's no point for us to waste time and effort to keep track of their records and so on and so forth for them. Okay? So in this case, that is exactly why we don't need to put them in our subsidiary ledger. Okay? Because they're just our in-store customers. They're a bunch of strangers that bought coffee from us. Right? And we're going to keep them as strangers until they decide to return and actually want to have an account with us, and so on and so forth. Okay, so no need for the subsidiary ledger. Okay, what else do we need to do?
Don't we have to put a deposit in there somewhere in our check register or something?
Absolutely, because money doesn't just magically appear in your checking account, right? You have to physically go take that money to the bank and make a deposit. So we need to go ahead and record our deposits. Okay, so again, this is what I'm going to tell you in advance. We are going to make deposits at the end of every single day. Okay, now how do you know it's the end of the day? Your sales for the day is always going to be at the end of the day. Okay, so in this case, after you've done your sales and you collected the money, I want you to deposit the money right away. Okay, so in this case, what did I get the receipts for? In this case, this was for in-store sales. How much money did I collect?
$745.94.
Okay. And what is today?
17.
This is deposit number 2. For how much? For that $745.94. So that's how much money I put in for deposit slip number 2. Right? I didn't collect any money from anybody else that I need to deposit. I'm only depositing what I had collected from the grand opening sales. Awesome. Okay. And is that it?
I think so for that one.
Mm-hmm. Nothing else, right? All right. Now, for this case, right, I had to use my regular and supreme coffee in order to make these coffee cups, right? What did I keep my track of my coffee as?
Well, somehow you got to put that into inventory some way as cost of goods sold.
Correct, because in this case, how did we keep track of my coffees? How did I want to keep track of my inventory for the coffees? What tracking method did I use?
It was perpetual.
It is perpetual.
Moving average, and supreme is FIFO.
Good. So in this case, we also got to go back into the back room and count all of our coffee pounds, right? How many have we used? So in this case, we used a total of 10 pounds of the regular coffee, and we used 15 and a half of the Supreme coffee. All right, so in this case, there is a calculation made. I just didn't reveal it in here. I think 1 pound makes about 100 ounces or something like that. So if they each make 100 ounces, and this is how much roughly, if you tally up all the total coffee cups that you sold, roughly it's about 10 pounds of regular coffee and 15 and a half pounds of the Supreme coffee. It might be 150 ounces. I can't remember the exact number, but it's already been pre-calculated, something you don't need to know. But in this case, this is what your Bartista told you. Okay? That I used 10 pounds of the regular coffee and I used 15 and a half pounds of the Supreme coffee to brew the coffees in store. So, if you used these pounds of coffees, how in the world am I going to record that?
Well, your general ledger has a COGS tab.
Yes, it does. So let's take a look at my chart of accounts for the cost of goods sold section, which is expenses. What do I have here? Oof.
Somebody else talk because I'm not caught up with the.
What does my cost of goods sold section have?
Do you mean what's a part of the cost of goods sold?
In this case, we already recognize that because we used some of the coffee, right? Cost of goods sold is a direct correlation to our inventory, right? If we sold something, we need to know how much it cost me.
Mm-hmm.
So if I used something, I have to record that because it's directly correlated to my inventory, which is correlated to my sales, right? I'm asking right now, what account am I going to use to represent the usage of my regular coffee and Supreme coffee?
Wouldn't it be sales?
I already sold it. I need to know how much it cost me.
So wouldn't it just be cost of goods sold?
Right. But my question is, which account am I going to use to represent the cost of goods sold? Cost of goods sold is correct.
Wouldn't it be the regular coffee and the Supreme coffee?
Cost of goods sold for the regular coffee, $5,050, and the cost of goods sold for the Supreme coffee is $5,100. Good. Now, if I'm going to be taking that amount, right, and calculating that, so COGS, okay, and I'm doing COGS Supreme coffee. If I'm going to update my inventory, right, what account am I going to be taking these out from?
Wouldn't it be debit?
It is debit, the cost of goods sold. But where am I going to be taking these amounts out from? What would be my credit? Where am I going to be taking these cost of goods sold for my Supreme coffee out from? What account? Inventory. Good. So in this case, I'm going to be taking it directly out from my regular coffee inventory account and my Supreme coffee inventory account. Excellent. Okay? So again, let's take a look at what those numbers are. Okay, so my inventory. Supreme coffee, regular coffee is $12.20 and my Supreme is $12.40. Okay? Now in this case, I have to calculate what it cost me, right? So where am I going to go? I'm going to go to my inventory worksheet because that's where I can solve for my cost of goods sold. So let's go to my inventory worksheet for my regular coffee. Okay? So today is the 17th. How many pounds of regular coffee did I use? It says here that we used 10. We used 10 pounds. Okay? Now, let's take a look at my coffee, right? If my regular coffee is using moving average, right? Right now, what is my average cost per item for my regular coffee? If I have 125 pounds of regular coffee, what is my average cost per item? How much is it going to cost me per pound to sell?
160.
It's going to cost me $1.60, right? I'm not talking about selling price. I'm talking about what it cost me. So in this case, it's going to cost me $1.60. Okay? So in this case, I'm just going to copy it over, $1.60. Okay? Okay, I guess I can't. Okay, there you go, $1.60. So, how much is it going to cost me in grand total? What's my total cost of goods sold if I sold 10 pounds at $1.60?
$16.
Right? This one's straightforward math. You're going to take the number of pounds times the unit price or the cost per item, and that's going to give me $16. Okay? $16.
Actually, you gotta take it out of the inventory on hand.
Yes. Now that this is why we're going to take it out of my inventory on hand, because right now it says right now I have 125 pounds. Is that true?
No.
No. So I need to take out my 10 pounds. So that means in this row, as of June 17, how many pounds should I have left?
115.
115. So I'm going to go ahead and use my Excel spreadsheet to say 125 pounds is what I started out with. I just sold 10 pounds, so I should have 115 left. Right? And for moving average, right, we're constantly calculating what my average is, right? I need to keep changing my quantity and my total cost. So in this case, I'm also going to do the same thing for my total cost. If I originally started with $200 and sold $16, how much money should be left over?
184.
184, and that's going to give you an average cost of $1.60. So in this case, I don't need this information here because I don't have this stuff anymore. Okay? I currently have 115 pounds at $1.60, which is going to give me a total of $184 in total cost. So how much did it cost me to use 10 pounds for the store? It cost me $16. Okay? So that's my regular coffee. Now let's go ahead and do my Supreme coffee. Okay? How many pounds did we use for my in-store sales here? I used 15 and a half. Go ahead, sorry.
No, 15.5, so
Okay? We're using the rules of FIFO now to calculate the cost of goods sold. So right now, how many batches of inventory do I have right now?
1,
One. What is its cost per item?
180.
Right now, I only got one batch of inventory, and it's currently costing at $1.80 per pound. Okay? So once again, I need to figure out what this total cost is.
$27.90.
$27.90. Okay? So now, in this case, I can go ahead and directly take it off. So here shows that I have 125 pounds, right? I need to fix this because I don't actually have 125 pounds. How many pounds do I actually have? So I'm going to go ahead and do 125 minus 15.5. So how many pounds should I actually have?
109.5.
109.5 at $1.80, which will give me my 197.10. Now, if you don't believe this is true, go ahead and do the math, right? If you started out with $225 and you sold $27.90, how much should you have left? You should have 197.10 left. So in this case, that math is correct. Now, if you are not sure that that is correct, you can always do it on the side. Okay, so in this case, you could do 225 minus the 27.90 to make sure on the side of your inventory worksheet that you're constantly calculating the correct amount. Okay, so now it's 197.10, which is true. So now that I updated my inventory, right, this is the information that I got. For me using the coffee for the in-store sales, right, it cost me $27.90 for the Supreme, and it cost me $16. So that's exactly what you need to do, is that you sold $16 worth of regular coffee, and you sold $27.90 worth of Supreme coffee. In this case, you used it, so that means you didn't really sell it, you used it. So therefore, you got rid of it off of your inventory, and that's exactly how we utilize inventory for perpetual inventory when we are dealing with a sale, right? Is this hitting those light bulbs now?
Yep.
Oh, that's what you mean. Okay. So again, we're piecing things together one at a time, and now it's making sense, right? This is what I mean by you're keeping track of how much you purchased, you're keeping track of how many you sold or how many you used, because really, you don't have 125 pounds, you use 10 of them. So you need to update your inventory to reflect what you actually have before you sell off your inventory and realize, oh no, I actually didn't have enough inventory on hand. Okay, so there you go. All right. And what kind of comment do you want to have here?
I would put grand opening sale, 10 pounds regular, and 15.5 Supreme.
Okay, so in-store use, and you want to say that you used 10 pounds regular. In this case, you not necessarily, because we have a place to put that. So I'm just going to go ahead and just put in-store use. If you want to put it in there, that's up to you. Because again, we could put that in our ledger. Our ledger is going to make a lot more sense with this. In this case, I can just recognize that I used these pounds in store. Okay. So let's go ahead and record the usage of our coffee. Okay. In our ledger. So we are finally tapping into cost of goods sold. Right, here's my cost of goods sold regular coffee. Okay, today's the 17th. Right, this is where you could say I used 10 pounds. Which cost me $16. Right? Where here for my Supreme coffee, I could say that I used 15.5 pounds for $27.90. And then I now need to update my inventory. So this is where you get to see the fun part here, right? Here's my regular coffee, right? First thing I did on the 12th was purchase 125 pounds. Here, I also recorded that I had shipping cost. Now I'm going to record that I end up using 10 pounds of my regular coffee. And what is that going to do to my coffee? It's going to decrease my pounds because, again, I started out with 125 pounds. Now I subtracted 10 pounds, which cost me $16. So therefore, it should drop my inventory to $194, $184. And where does this look familiar?
We saw that in the inventory
You
worksheet.
saw that in your inventory worksheet. So that is rule of thumb here. Now notice this. My ledger matches my inventory worksheet. Now, I'm going to tell you this. Since your ledger is going to be punching in rounded numbers, your ledger is going to be more accurate than your actual inventory worksheet. Okay, so there's the problem with if you do your equal round formula incorrectly, if you're not paying attention to those split pennies, this is where you will be able to find your split penny mistake so much more easier by making sure that your general ledger is going to be topped over your inventory worksheet. So in this case, we are matching my ledger to my inventory worksheet because I'm making sure that when I calculated these numbers, that it was accurate on my inventory worksheet compared to my ledger. Okay? All right? Because again, I'm punching in solid rounded numbers where that one I had to calculate those numbers, right? And use an equal round formula. So there you go. That is true. 184 is correct because it matches my inventory worksheet. So again, utilize that as a means to keep track of your inventory, and that also verifies that you did your accounting correctly. Okay?
So then what you're saying is if our inventory worksheet is off by the half penny or whatever, we go with what the ledger says, right?
Correct, because we're punching in rounded numbers where the formulas that we're calculating in the inventory worksheet, those ones are unrounded numbers, right? Especially the moving average. We haven't seen it yet, but or for instance, let's say we do FIFO and we're getting unrounded numbers because we get a split penny going on. That will be the example where you will see where your money is actually going. Okay? But for your ledger, you're punching in those numbers. Where in your inventory worksheet, you're calculating those rounded numbers. So there's a huge difference. Mm-hmm. So again, here we are in my Supreme coffee.
Yeah. Use 15.5 pounds for $27.90. Now I have a question for you.
Go for it.
Okay, so if there is a difference, do we change the inventory worksheet to match the ledger?
Yes.
Do we adjust it? Okay, I
Yes.
just wanted to make sure.
Yes.
All right, thank you.
Mm-hmm. Okay. Because remember, the cost of goods sold has to be a rounded number because again, when you're selling to a customer, you can't sell them half a penny. You can't sell them 75% of a penny, right? You have to be forced to round up. And if you're going to be charging your customers based off of what it cost you, right? Think of it in real life terms too. Can you pay a vendor $2.85 No, right? You can't. You have to pay them $2.86, right? Because that's how it works. Because if it costs you by you purchasing that inventory, that is what I mean by using rounded numbers. Is that your general ledger would be more accurate than your actual inventory worksheet. Your inventory worksheet only gives you more accurate numbers if you're selling and costing and calculating the cost per item. Even if you have a split penny going on, again, your inventory worksheet, right? It's because um, you have to choose one or the other ways, but we want to get the most accurate amount per item. That's what causes those discrepancies is that split penny, right?
Okay.
Right. All right, so now that we updated my inventories, right? I did my just updated my regular and my supreme coffee. Now, do I need to use my subsidiary ledger?
No.
No. Why? Because this is an internal transaction, right? You didn't hire anybody to get rid of your coffee, right? So, in this case, your barista opened up those packages, opened up those bags of coffee himself, and now he's just reporting you what is missing or what he used. So in this case, this is an internal transaction. Okay, and that's it, right? We got to take a look at inventory. We calculated how much it costs us to sell it, and we updated our inventory because we had perpetual inventory. Okay, so I'm gonna stop here. Okay, and when we come back from the break, we'll go ahead and finish we'll go ahead and start the 18th. All right. So right now it is exactly 3:02. So I'm gonna round that to 3:05. Just go ahead and spend the 15 minutes. This is short. There's not a lot of people in this class.